What is up? Welcome back to another video. In this video, I'm going to be talking about the trades that I took on Friday. I had a 100% win rate week. I did not lose a single trade the whole week. Every day was green on my personal account, and I can show my executions. I post them all on my Instagram, so make sure you follow my Instagram. So yeah, let's jump straight into it. Now, the model that I trade is the inversion fair value gap model. Now, if you're unfamiliar with inversion fair value gaps, all they are is fair value gaps that are disrespected and then have a close above the fair value gap. So let's say we have a bearish fair value gap like this. As soon as price action closes above this fair value gap, so as soon as a candle closes here like this, then that means that this fair value gap would be disrespected. And if it is a fair value gap that I like, then I would long that fair value gap to the buy side as an inversion fair value gap, even though this is a bearish fair value gap. And most people would be shorting once this fair value gap is tapped into, because that is just what a lot of the basic ICT traders do. And sometimes I do short bearish fair value gaps, but most of the time you will see me taking the inversion fair value gap. Now, with this model, you need to make sure you have a lot of context going into the day. You need to figure out where buy side wants to go. So let's jump into Friday. At 9:30, we were heading down. We had these big down candles just before the open, and then actually price action at 9:30 open was very choppy. So we had one bullish fair value gap here that got disrespected, but I was not interested into taking any shorts, as price has already took a lot of sell side liquidity. As here, as you can see, we have this sell side liquidity, and at the 9:40 candle, prices came down and just took this sell side liquidity. So I wasn't interested in any shorts on this day. I was only interested in longs. And then, as you can see, at 11 o'clock we create this bearish fair value gap. Now, I normally tell you not to take trades after 11, as that is when price action normally gets quite shit. Price action normally gets quite bad. But as you can see today, price action after 11 was actually good, and just because we got such big displacement to the downside after a lot of consolidation, I was pretty confident in this trading setup. So we had this bearish fair value gap. Now we've already took sell side liquidity, so on my chart in the moment I would have this buy side liquidity taken. So I had buy side liquidity marked out like this, and then I also had this buy side liquidity marked out. Buy side liquidity marked out. Now, as you can see, we have this bearish fair value gap here. Now, I entered into this trade around here because here we got the inversion. So let me just go into replay to show you guys. So we create this bearish fair value gap, then there you go, that fair value gap is created, taken sell side liquidity, which is perfect. Then we just hang around in this fair value gap a bit until we get displacement to the upside. So right there we get some string displacement, we close right there. So I enter into a long position around here. My first target was this buy side right here, so I had a 30 pip target. My stop loss is always if the candle comes back and closes below the inverse fair value gap, which price action never did. So we play at the price action. it comes and taps into this inversion fair value gap. Now, I know a lot of people that, well, I know some people that like to enter into inversion fair value gaps once the price retraces back into the fair value gap. But as you will see, if you watch my channel or follow my Instagram or TikTok, you'll see that a lot of the times price doesn't like to retrace into the inverse fair value gap. It just goes straight up. So here we get a tap into this inversion fair value gap, then price comes and takes my first take profit. Now, I was 100% out in this position, but I was willing to re-enter into the position if we did not take this buy side up here, because that was my main draw on liquidity. So we play at the price action. We are now in lunchtime macro. We get a reaction off of this bullish order block right here. So my next entry actually into this trade was not an inversion model trade. It was just off a reaction off an order block. So I think I went to the lower time frame. I saw that price was respecting this bullish order block, so I entered into a long position right here. I targeted buy side liquidity up there. My stop loss would be if we got a candle close below this order block, or if we just came down to this low right here. But luckily we did not come down. Well, not luckily, but we did not come down to this zone. And then we play at the price action. We have this bearish fair value gap that got inverse, so this could have actually been another entry, but I was happy with my trade and I already took a winning trade, so I didn't enter into this. Then we play at the price action and price goes and smashes the take profit right there. So that was 2 trades I took on this day. I actually took 4 trades on this day, but 2 were break even earlier in the day, and then I had these 2 winning trades on my personal account. So yeah, these were the trades I took on Friday. Now, one thing I haven't actually spoke about is my daily bias, because right now, as you see, price action is very choppy at the end of the week, and the reason for this is very simple. We have already took our weekly targets. Early in the week on Tuesday, we took both buy side liquidities that I marked out, buy side liquidity. So if you go back to one of my videos on Monday, I actually say we have inversed this fair value gap right here. So now I want price action to go to these highs here. I say that in my video that I uploaded on Monday, I think, before this happened. So yeah, that ended up playing out nicely. We took this buy side liquidity, and now we have just been going sideways because we have took the targets. So because we have took this targets, and we also have a daily volume imbalance right there, price has tapped into that daily volume imbalance, tested this daily order block over here. As you can see, that is a bearish order block. We have tapped at that bearish order block, and now price is just going sideways. So in these type of market conditions, you want to be taking short scalps. You want to be careful trying to hold positions for a long time, because price action can get quite choppy, as we've seen from 9:30 today. So yeah, I'll just give you a little quick overview on my daily bias. I hope this video helped. Make sure you subscribe and follow my Instagram.